I'm Taylor Riggs in San Francisco, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, tensions mount after President Trump orders a U.S. airstrike that killed one of Iran's top generals. As Tehran vows retaliation, we look at what could happen in the cyber realm. Plus, Tesla delivers. The electric car maker starts the year on another high note with a record amount of deliveries. But will the Tesla turnaround continue? And price targets for Apple raised to $330 a share at RBC and Bank of America. We'll discuss the optimism over iPhone sales in the holiday quarter. But first, to our top story, and it is the U.S. airstrike that killed one of Iran's top military officials. It's raising the specter of a cyber retaliation from Tehran. In the wake of the attack, Christopher Krebs, the director of the U.S. Cybersecurity and Infrastructure Security Agency, repeated his warning, urging the public to brush up on Iranian tactics and to pay attention to critical systems, particularly the industrial control infrastructure. To discuss, we're joined from Boulder, Colorado, by VMware's head of cybersecurity strategy, Tom Kellerman. And in studio with me, it is Bloomberg cybersecurity reporter Kartikay Mehrotra. Kartikay, I want to start with you. Thank you for joining us. I often read here that Iran will respond to our sanctions. Sometimes it's been via military, and increasingly, it now looks like it's cybersecurity. Do you see these increasing cybersecurity threats as you've been covering this?
Yeah, I think there's been a persistent threat. I think most organizations that have a server on the internet are constantly being bombarded by Iranian hackers, Russian hackers, Chinese hackers, anybody who has the capability. The question now is, after the attack yesterday, in what way does that change? In what way do those attacks exacerbate? What new tactics might be in play? And exactly how do major brands, companies, organizations that manage these industrial control systems respond or bolster their defenses?
Tom, do you agree that increasingly Iran will be responding to us via cyber warfare?
Very much so. This airstrike will be met by a cyber strike. In fact, I think Iran will now begin to take their own gloves off and wage an insurgency in American cyberspace, as they have the technical acumen now and the weaponry to leverage significant cyber attacks against the energy sector, the financial sector, and the transportation sector.
Kartikay, you said that they were looking perhaps at any new tactics. What in your space that you cover could some of those new tactics be?
I think there's a major question about what they've had up their sleeve for quite some time. We've seen them drop DDoS attacks, send malware, ransomware, but if they somehow have a 0-day, something that can't be beat back immediately, if there is no quick solution for, this might be one of those cases where they actually use it, what they've been saving it up for. The problem with anticipating that kind of attack is you don't know exactly what you're in for. The best solution is to know exactly what your network looks like. And in those industrial control systems, what we're hearing is that a lot of these companies that have machines talking to machines don't always know exactly what that network looks like.
Tom, you mentioned energy, transportation, some financial institutions. Walk me through each of those theses, each of those arguments, if you will, about how those sectors present the most vulnerability.
Yeah, so let's back it up one bit and note and pay a little bit of respect to the coding in Iran. You know, they've developed numerous destructive malware payloads over the years. They took down the largest oil and gas company in Saudi Arabia through destructive cyber attacks years ago. They have the capacity to destroy the integrity of data and to destroy systems. And we should be very concerned with that type of attack against the energy sector and the financial sector. Even though the financial sector is much better secured than the energy sector as a whole, it has too many interconnectedness, and the dependencies of the financial sector are so vast that the Iranians can island hop through the trusted ecosystems of the sector, whether it's the ISPs, whether it's the managed service providers, whether it's even the security vendors themselves. But destructive attacks, according to VMware and Carbon Black's research, are up 11% last year, and I can only imagine that they're going to explode in the coming month.
And Kartik, as you look, how much more vulnerable are the energy, are the transportation sectors relative to, let's say, the financial sector, where mainly in the past that's been the most targeted, and perhaps that's an area where they have really tried to get a good defense up. How much vulnerable now does that make some of those other sectors?
I don't know that it makes them any more vulnerable than they already were, but the concern is that there is very little visibility into their own networks to start with. So if, for instance, an Iranian group was already in that network, now might be the time where they actually turn their presence into a kinetic attack, where they take cyber weapons and use them to derail a gas plant or a hydro plant that actually costs lives.
Yeah, Tom, walk me through.
That's an excellent point.
Yeah, so walk me through that.
Well, that's an excellent point. That's why I referenced the term insurgency in the beginning of this broadcast. They already have footprints on systems that they now can realize an attack against that infrastructure. We should be very concerned with lateral movement within systems. The lack of visibility is quite profound because many organizations haven't asked the tough questions. CEOs right now should be convening meetings with their CISOs as we speak and asking them, do we have visibility across all of our devices? Are our security controls integrated? And most importantly, do we have a cyber threat hunting team that is actively conducting hunt exercises in our infrastructure now to root out that type of insurgency?
Tom, you mentioned also in the top of the hour that the coding in Iran has become very advanced, but we too have some pretty strong coders here in the U.S. Are we able to take on, are we as prepared as we should be to heat off the advance of Iran's coders?
I think we are, but the challenge is our Constitution, in so much that the NSA cannot actively defend or protect American businesses unless they're invited in to do so, number one. Number two is the Iranian cyber army is actually larger than just what you would think of as a division of a military, because they are a collective of cyber hackers who have who pay homage to the regime through their activities around the world. Whether they do it for Hezbollah, whether they do it for other groups. And all they have to do is be right once. They have to deploy one destructive payload one time into a system to destroy the integrity of that data, which could cause an energy system-wide failure, or could cause transportation systems to fail, resulting in physical deaths, and more importantly, they could leverage attacks against emergency management services during times of crisis.
Kartik, what are you hearing as the potential biggest threat in terms of if we're prepared or if we're not? What would you advise, or what would you imagine that companies are doing right now to make sure that they are prepared?
It's interesting. So we started the day out looking at banks and the financial sector to understand where things stand. And most CISOs who got back to us said, we're constantly paying attention. Nothing really changes for us because we have the infrastructure, we have groups that communicate with each other to prepare for this. We're looking for this every day. I think it's in these industrial control systems, in power plants, in the transmission of electricity systems and the distribution of electricity systems where the greatest vulnerability lies. I think what has to happen first, though, is that Iran needs to understand how they got beat this week, where those vulnerabilities came from, before they probably start planning a new attack.
Tom, final thoughts to you as we shift to conducting cyber warfare instead of military physical warfare. Does the U.S. now shift to doing that as well? Do we start doing our own cyber warfare attacks, maybe more progressively as well, to take on Iran?
I can't speak to the doctrine of the military or strategies that are being implemented as we speak, but I will tell you that there are certain red lines of if there are cyber attacks that result in physical harm to U.S. citizens or significant attacks against, let's say, the healthcare sector or energy sector, that the Cyber Command will respond. That being said, what type of proportional response will we leverage or preemptive strike will we leverage is unbeknownst to me. But the number one thing that every CEO who's watching this must be done is have that meeting with your CISO immediately and ask them, have we deployed our cyber threat hunting team?
Well, Tom Kellerman of VMware and Bloomberg's Kartik Mehrotra, thank you both for joining us. Now, Wall Street is increasingly pessimistic that T-Mobile will complete its $26.5 billion takeover of Sprint. The spread between the offer price for Sprint and the trading price is now at the highest point since the deal was announced in 2018. The FCC and the Justice Department have okayed the transaction, but 13 states have gone to court over it. They say the deal would lead to higher prices and weaker service. And coming up, Tesla is on a roll, topping Wall Street estimates with record vehicle deliveries in the fourth quarter. Can CEO Elon Musk keep up the momentum? And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. The Tesla turnaround continues. The electric car maker delivered a record 112,000 cars in the fourth quarter. Buyers rushed to take advantage of subsidies being dialed back or eliminated altogether in 3 key markets. The biggest seller was the Tesla Model 3. To discuss, we're joined by Wedbush Managing Director Dan Ives, and also with us, Bloomberg's David Welch in Detroit. Dan, I have to start with you. 112 deliveries in the fourth quarter. We're getting 367,000 deliveries in 2019. Are you surprised that Elon Musk did it again?
Look, it was a Picasso-like performance. And I think ultimately, if you look what Musk has done and Tesla over the last 6 months, proved many of the skeptics, including ourselves, right? If you go back the last 3-6 months, wrong in terms of what you've seen demand, especially in Europe. And I think if they're able to continue that, especially with China, we talk about our bull case 580 to 600. I think that's where that becomes reachable.
David, the one caveat, if there is any, is you had a lot of buyers rush to the market to take advantage of subsidies that were being lowered or expiring at the end of the year. Without those, is there enough demand here?
Yeah, that's the big question in the U.S., right? Because as of January 1st, there are no longer incentives available to buy a Tesla. And we have actually seen Model 3 demand in the U.S. down. But that's the argument here. Did sales go down because people don't want them, or because, as Elon Musk has told us, he's diverting production to Europe and to China until he gets production up in those markets? My guess is it's the latter. There's still actually plenty of demand in the U.S. for the Model 3. I think the bigger question isn't will he sell all the cars. It's as you get past the early adopters who want the loaded up cars with the bigger batteries and you start selling less expensive Model 3s, can they make money doing that? Can they wring enough cost out of the system? Can they lower the cost of their batteries enough to start really consistently making good profits on the cars and also high enough margins to justify this huge valuation?
Dan, I want you to react a little bit of that. As we took a look at the fourth quarter numbers of the 112,000, about 93,000 of those were the Model 3s. Are you comfortable with the composition mix, given 93 of 112,000 are Model 3s, and those are lower profit?
Yeah, and look, and that's really, they're betting the company on Model 3. S and X is going to continue to tail off. You'll have Y come in later this year, and then eventually Cybertruck. But no doubt, that's the hearts and lungs of the Tesla story, Model 3. And I do like the mix, especially what you're seeing in Europe. And this is all the drum roll to China. Because China, $75 to $100 per share is the swing factor, depending on how successful they are there. And that's why Giga 3 is really the linchpin of Tesla's China strategy.
David, I want to come and show you a chart here that I'm showing inside my terminal. And I know I show this every time we talk about Tesla because this continues to be the big surprise, which was that banner earnings per share in the last quarter that we saw. Can they, though, continue to cut their way down to a profit? Where do they continue to cut?
Yeah, look, that's a big issue because even though they did make a nice profit there, they surprised on the upside. There are a lot of one-timers and things that weren't exactly repeatable there. And that's why there is still a bull case on this company for some analysts and some investors who just aren't convinced that the profitability will consistently be there. And remember, they can't just make money. With a valuation where they are right now, $430, $440 a share, you've got to have real margins and you've got to have very good cash flow consistently to do that. I think they'll get the growth, particularly in China, but they've got to really lower their costs operationally, not just by trimming operations, trimming sales staff and that sort of thing. They've really got to wring costs out of the vehicle and get the kind of scale to make real money.
Dan, talk to me more about how they could cut costs operationally to continue to boost that bottom line. I was speaking with an analyst over at Canaccord Genuity earlier this week, and he was saying that on the same assembly line, Tesla is working on producing Model 3s and some of the other higher profit models on the same line, and that they haven't ever really been able to do that before. Have you noticed that as well in your analysis as another way to cut costs?
Yeah, and I mean, obviously doing factory tours there, and what you've seen, I think really there's two areas. One could obviously be the tooling in terms of just taking over some of those lines and more efficiency, not just in Fremont, but in Giga. And then I do think just operating efficiency, especially as they start to scale, you'll start to see those profits start to increase, especially in Model 3 with software and self-driving, some of these other pieces. That's all margin. That all flows to the bottom line. I think that combo right now is what Musk and Fremont are betting on to continue to see that P word profitability.
Dan, while I have you, I wanted to show another chart that I'm looking at in my terminal, and it has been the runaway stock price that we have seen now at a 443. The median price target on the street is a 303. Are you comfortable with your price target given the size and scope and the rate at which the stock has run up?
Yeah, look, it's a parabolic run up, and you could say half that's maybe short covering. But I think what's starting to happen here is that the vision, the EV vision in terms of Europe and especially China, it's now starting to happen. And no doubt, dark days the last 6 to 9 months, and obviously we criticize them as well as others. But now this thing starts to really take off, and you can get the 500K units. Then all of a sudden you're looking at a stock that could be $580, $600. And I think that's what sort of the bulls now are starting to see. And many of the bears are having to go into hibernation mode.
Okay, well, we'll have to get you back to keep you posted. That was Bloomberg's David Welch. Thank you for joining us. And Dan Ives of Wedbush, he will be sticking around with us because up next, we're going to be talking about another hot stock, and that is Apple, their start to the year, and why analysts are so optimistic about this holiday season. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg. Apple's price target was raised by at least 2 analysts on Friday. Both noted citing optimism over iPhone sales in the holiday quarter. RBC Capital Markets and Bank of America boosted their targets to $3.30 a share. For more on Apple, I want to get back to Dan Ives of Wedbush. Dan, come and look at a chart that I'm showing here inside my terminal just quickly. You see Apple at $300 a share today, pulling back just to $297. At $297, $300 a share. Overvalued, overextended, or breaking out into a new trading range?
Yeah, breaking out into a new trading range. I think it's really been a two-part thesis for us over the last few years. I think the first part you saw this year, and obviously stocks had a massive move, but it is a 5G super cycle that we're going into. And when you look at the install base, 900 million iPhones worldwide, and where penetration is, I think about a third of those are going to upgrade over the next few years. That remains a core 5G play, and I think a re-rating now is continuing to happen on Apple, and I think many are starting to now come around.
So Dan, if you come and take a look at another chart inside my terminal, I know my producers kill me every time I do this. Your price target now, you're leading the way at $350. We got 2 of those price target raises today to $330. But after an 86% run up in 2019, how much of the good news is already baked into the share price, in your opinion?
I think only half of it. I mean, I could tell you from talking to institutional investors on a daily basis, it's still underowned by many in terms of not believing in the 5G super cycle and really the install base sort of upgrade cycle in terms of what's happening. And I think for a company that's historically traded 12 to 16 times, now breaking out in terms of where it's trading, there's still a lot of haters out there. And I think that's what I like to see. You don't want to see everyone loving this. And I think they're going to continue to prove Cook and Cupertino over the coming quarters, not just iPhone's Rock of Gibraltar, but what they're doing on services. And I think that's really the 1-2 punch to where you get to 350 or north of that as we go into next year.
What if 5G doesn't pan out? What is your estimate for that left side, downside, tail risk event?
Yeah, and I think that if you said a bear case, outside of exogenous events, it's okay, what happens if 5G is a dud? And I think to that point, if you look what's baked into numbers right now, it's called 200 million units is lying in the sand. Upside potentially could be 220, 225. So I think what's really being baked in here is not an overly bullish number in terms of the street. And that's what I love about the setup. And if it's a dud and you see some disappointments, and you'll definitely see some sort of speed bumps, which I view as creating opportunities in the stock. It's a two-part 5G cycle. There's a 2020, 2021. So I don't view this as just a 6 to 9 month cycle. I view it as really a 12 to 18 month.
You said that the 1-2 punch is not only 5G, but then services. So much of the frustrations over this company is the cyclicality because they get more than half of their revenue still from the iPhone. What % of revenue do you want to see from services to reduce that cyclicality and become a more stable stock?
Yeah, I think for now, and really for the foreseeable future, iPhone's going to continue to be the core part of Apple. We don't see that changing. But what I would say on the services piece, now north of 50 billion. You go into next year north of 60 billion. And I think the valuation, what I love about it is that services valuation, I think, is 500 to 600 billion. So you're starting to see more recurring revenue there. And I think that combo is also being re-rated by the street. And that's sort of what I love about the way this is playing out.
Dan, push this story for me. We're waiting to get a rare official Apple appearance over at CES. Anything that you're looking out for the company at CES?
Yeah, and we'll be there, in person. And I think, look, that's obviously more about privacy. And I think you saw last year at CES, that's really Apple line in the sand, being like, we're here, Facebook and others, they're over here. That's really them trying to kind of continue to delineate themselves in terms of where they view themselves from a data privacy perspective. Now, obviously, totally different business model in terms of Facebook and Google and others. But this is really Cook and Cupertino continue trying to draw that line in the sand where they stand on data privacy, especially with the Beltway and the 202 area code definitely will be knocking this year.
Dan Ives of Wedbush, thank you as always for joining us. And coming up, tensions mount. We continue our look at the standoff between the U.S. and Iran following that deadly American attack. All of that next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in for Emily Chang. Back to our top story, and that is the escalating tensions between the U.S. and Iran. Speaking in Florida, the president defended the U.S. airstrike that killed one of Iran's top military leaders.
If Americans anywhere are threatened, we have all of those targets already fully identified, and I am ready and prepared to take whatever action is necessary. And that in particular refers to Iran.
To discuss, we're joined from Washington by Jamil Jaffer. He's the Vice President of Strategy and Partnerships at IronNet, a cybersecurity firm started by the former director of the NSA, retired General Keith Alexander. And prior to that, he served as senior counsel to the House Permanent Select Committee on Intelligence. So great to have you. To kick us off, give me your broad thoughts on Iran most certainly responding via cyber warfare.
Sure. Well, Taylor, look, I mean, Iran certainly is going to feel the need to respond here. We have taken a very strong action, the president has, in response to a long-standing series of aggressive activities by the Iranians. They're likely to respond in one of two ways, Taylor. Either terrorist attacks, likely abroad. I think they'd be very dangerous for them to risk a terrorist attack here in the United States. That would almost certainly provoke an overwhelming response. But more likely, they're likely to conduct cyber attacks here in the United States against American industry or the American government.
Talk to me why a cyber attack seems to be the better of the two options versus a full-out physical military attack from them.
Well, depending on what level they come at us in the cyber attack, Taylor, they could ratchet it down at such a level where they're seen to respond, it has an effect, but not the kind of effect that would force a very aggressive response from the president, who clearly is willing to take action directly to the Iranians in a way that he hasn't yet to date in his presidency, and the prior president, President Obama, hadn't during the bulk of his presidency also. So, I think the Iranians are looking at this and saying, Donald Trump might very well be willing to go toe-to-toe with us. Do we want to provoke that? And so that's something they don't have to weigh in as they look at what to do next. That's why cyber looks like a place they might be willing to come at us and be able to ratchet down what they do with respect to the attack here against the United States that they're likely to conduct in response to these attacks.
I think one of the concerns is Iran comes out and says we could do this at any moment. When, if that's the route in which they take, would you expect a cyber attack to be coming?
Well, Taylor, I think the idea here would be that Iran would do it fairly near in the future. And the reason why I say that is because Iran certainly feels the need to respond. They're under a lot of pressure publicly, their own population. There's a huge Iranian diaspora, not a lot that support the regime, certainly. But the Iranian people are looking at their government and saying, look, you've taken it on the chin. What are you going to do? And they're going to feel that need to respond, in part because this was the right attack to the United States. We responded in a very strong way to very aggressive Iranian aggression. Remember, Qasem Soleimani has American blood on his hands, with 600 Americans having been killed in Iraq by Iranian-developed explosive form penetrators that they gave to Kataib Hezbollah between 2011 and 2016.
We earlier have a soundbite from Admiral James Stavridis. I want to listen to that and get your reaction. Listen to what he had to say.
They're quite capable in this realm to launch a significant cyber attack against our financial institutions, our infrastructure, our educational system. They are highly capable in cyber. So look for horizontal escalation here by Iran.
Jamil, the admiral there talking about financial, education, some of the other infrastructure areas really being here most at risk. Where do you see the most risk as well?
Yeah, Taylor, I think Admiral Stavridis is exactly right that Iran will conduct these attacks. And I think the industries they're primarily looking at least historically what they've been looking at, is things like financial services, energy, oil and gas, healthcare, the government itself. So institutions that have a significant impact publicly and are seen as having an impact publicly. Again, part of this is perception for the Iranians to actually be responding to something here. And so I think those are the industries probably most likely to be looked at. Now, they're among some of the best defended industries here in this country. And so the key to a defense here is about, individual companies getting together, working with one another, companies working across multiple industries, and ultimately industries and governments working together, which is why what Chris Krebs said this morning and said on Twitter is really important. DHS needs to step up and start sharing information, actionable information, with the private sector now to help better defend the private sector.
How advanced has the Iran coding and hackers gotten? Are we prepared for it?
I think we are prepared for it. That being said, the Iranians have gotten a lot better, a lot faster. The Russians and Chinese and us have always been at the top of the game. The French also, the Israelis. The Iranians and the North Koreans are newer at this game, but they have dramatically upped their game in the last 2-3 years alone and are able to undertake very serious activities if they choose to do so. So the big question is not, do they have the capabilities? The question is, are they willing to take the risk of doing it, particularly with President Trump indicating he's willing to punch back, and he may punch back very hard.
Finally, can you give me some thoughts on how Iran's cyber warfare differs from other threats, namely Russia, China, North Korea? Do you see big differences between those four?
Yeah, well, I think, look, obviously China is a huge strategic threat to us. They're both a political, economic, a military threat to us, and a long-term strategic threat. Russia, too, being a longer challenger to us, has longer-term interests. Iran, North Korea, both very important, more regional players with, global ambitions, but certainly a capability in the cyber arena to act aggressively and to conduct what you might call asymmetric attacks, sort of bat above their pay grade, as it were. And so that's the concern here with Iran, both with their terrorist activities and their cyber activities, that they really can do a lot more damage than their own military strength or their regional capabilities might otherwise indicate. And that's why they're a particular threat in this space.
That is exactly what we keep hearing. That is Jamil Jaffer of IronNet Cybersecurity. Thank you for joining us. And coming up, Facebook expected to face regulatory headwinds in the year ahead, but one analyst is staying loyal to the social network and predicts a blowout fourth quarter. We'll speak with Victor Anthony of Aegis Capital. That is next. This is Bloomberg. Shares of Facebook hitting a 52-week high in trading on Friday. The social network stock up over 2% since the start of the new year alone. And our next guest raised his price target on Facebook to 300 from 235, saying in a note on Monday that the company, quote, will power through the regulatory and antitrust risks it faces in 2020. That is Victor Anthony, Managing Director for Internet and TMT at Aegis Capital. He joins us now from New York. Victor, great to have you. The share price closing just short of 209 today. Give me your path from a 209 to 300.
Well, number one, as you stated, I think they're going to have they had a very strong fourth quarter. And I based that on three reasons. Number one, the user numbers I'm looking at for core Facebook, Instagram, as well as Messenger, and the same for WhatsApp, has been extremely strong, just up and to the right. So extremely high engagement in the fourth quarter, user engagement in the fourth quarter. Second, the advertising checks that conducted have come back extremely positive. So I think that's a strong indication that revenue growth was extremely solid. And the third was really just a read-through from the online retail numbers that we saw, up 18-19% in the fourth quarter. I think the market ascribed most of that to Amazon. But what they're missing is the fact that those ads, there were ads that actually drove the retail, online retail sales, and those ads were on the digital platforms, primarily Facebook, primarily Instagram, and as well the other platforms like Google, Twitter, and Snapchat. But Facebook is one of the primary beneficiaries. So those three, put together, I think, suggest that Facebook had a very, very solid fourth quarter. And ultimately, I'm sorry, go ahead.
Oh, no, I wanted to get your thoughts more on Instagram because you've mentioned that a few times, and we were getting some other reports easily that Instagram stories alone make up 10% of all ad revenue for Facebook. I wonder, though, what is that left side downside tail risk if growth in Instagram starts to slow just a little bit?
Well, definitely you get the large numbers. Ultimately, the stories really took off tremendously on Instagram. It hasn't really taken off as much on the core Facebook platform, but I think that changes in 2020. The core newsfeed is still driving the bulk of the growth on the core Facebook platform. But yes, it's a combination of stories on Instagram, the combination of the newsfeed. Advertisers have really gravitated to stories. That's the feedback I'm getting. But it's still a long runway, I think, for stories on Instagram. So, I'm not too concerned, about the fact that it's a large percentage of the mix today.
I want to get your thoughts as well, just on a pure valuation standpoint. If you come and take a look at a chart here that I'm showing inside my terminal, it is a forward PE basis of Facebook. And you know the story. It hasn't rebounded off of its lows, and it's trading below other companies like a Google, like an Apple. Does Facebook, frankly, just look undervalued to you?
Yeah, well, Facebook stock hasn't really been a story of multiple expansion this year, unlike other stocks and other sectors. But I think that story could likely change this year. And number one, I do think there's continued user growth in 2020 across all four platforms. By the way, number two, advertising. By the way, Facebook accounts for roughly around 12% of total global advertising budgets today, and I'm seeing that actually growing to 18% by 2022. So significant share shift on Facebook. You also have the fact that 2019 was a peak investment year for them. So you have margin expansion in 2020 and 2021. You have EPS accretion in 2020, roughly 25% normalized EPS growth, normalized for the FTC fine this year in 19. 25% EPS growth in 2019. You also have a very, very strong balance sheet, strong free cash flow, which you don't really get the credit for, and undermonetized assets in terms of Messenger and WhatsApp, billion-plus users, and they haven't really even scratched the surface in terms of monetizing those assets. So you're going to get the Facebook, the stock has worked mainly because the estimates have come in significantly above, what analysts like me have been projecting. But ultimately, I think you will get that multiple expansion in conjunction with, with upside to earnings and revenues this year. So I'm convinced this is a stock you want to own over the next 5 years because of these factors I talked about: cheap multiple relative to growth, cheap multiple relative to the large cap peer group, U.S. and China, and also just it trades just a few points above the S&P 500. And if you look at 2021 multiples versus the S&P, it's even more compelling from a valuation perspective.
You also cover another well-known company called Alphabet.
Yeah.
Is Facebook poised to benefit more from Olympics, political ad spending, all coming in 2020, more so than Alphabet?
I think both companies, I like both companies. I think Alphabet will also benefit as well as Facebook. I think Facebook is a little bit more scrappier, so I think they may take a little bit more share than Google and Alphabet. But the story for Alphabet, though, is you have a business that's benefiting from several tailwinds. You have search is resilient. You have the fact that that YouTube continues to grow users and advertising dollars. The cloud business is becoming a formidable competitor in the space. I think they should probably report a $12 billion run rate by the middle of this year. You have good corporate governance. I was actually at Google's headquarters a few weeks ago. I met the employees, extremely enthusiastic, despite some of the headlines you're hearing about working at Google. I spent a few minutes with the CFO, Ruth Porat, excellent CFO. It's a good management team, good corporate governance, which they don't get the credit for. And also you have the fact that it's a chip multiple stock as well, similar to Facebook.
Victor, quickly here, come and take a look at a chart here that I'm showing inside my terminal. It is all the FANGs, and you know the story better than anyone. Apple, Facebook taking off. The loser in all of this is Netflix. Is Netflix prepared for upcoming streaming competition?
Well, I have a hold on Netflix, and but as far as the fourth quarter, though, Disney Plus has been a non-factor for Netflix. The data I'm looking at suggests that the user growth is pretty strong in the fourth quarter. But ultimately, I do think all of these streaming options that come, the ones that have yet to be released so far, when they all coalesce in 2020, I think that will put significant downward pressure on Netflix user growth in the U.S. And ultimately, as these platforms get rolled out internationally, you'll get downward pressure on sub growth outside of the U.S. as well. But not only that, you have the cash burn issue, which is an issue for me. I don't see them inflecting for several more years. You have the fact that they're losing premium second-run content, which I think ultimately will lead to churn. And you have an intrinsically high multiple stock. And add to that is the fact that I think that they've lost pricing power in the U.S. And I think ultimately they're well on the way to losing pricing power outside of the U.S. It's not a stock I'm recommending right now, even though I love the product.
Yep. Victor Anthony of Aegis Capital, thank you for joining us. And I want to stick with streaming because Apple, it's making another investment in its new streaming service Landing. Former HBO CEO Richard Plepler and his new production company to develop original movies and TV shows exclusively for Apple TV+. Landing, Plepler, is another sign of Apple's growing investment in Hollywood and its ability to attract top talent as it competes for viewers with the likes of Netflix, Amazon, and Disney. Here to help break it all down for us, it is Bloomberg's Lucas Shaw joining us from Los Angeles. Lucas, how big of a win is this for Apple?
It's a big one. There are few executives in the entertainment business and in media who have a better reputation than Richard Plepler. He worked at HBO for close to 30 years, and during all of the heyday of what you would consider HBO, starting with The Sopranos and on through recently with Game of Thrones and Watchmen. He was the CEO for the past 6 years, and he really only left after AT&T, the phone company, came in and bought Time Warner, which was HBO's parent, and they had some plans to change HBO, make it a little less independent. Plepler had really run his own company and had his own fiefdom for a very long time. He decided he wanted no part of AT&T's vision. He left and decided, as many former executives do, to kind of start a production company, lean into the relationships that he had, and he probably could have had his choice of any company with whom to work, and he chose Apple.
What unique ideas, creations do you think Plepler can bring to make Apple really stand out, given it is such a crowded space?
My guess is it'll be all about the talent relationships. You know, one of Plepler's strengths was developing relationships with documentarians, with filmmakers, with writers, with producers. You know, he always tended to put the talent first, and he will lean into that network, whether it's with publishers or kind of hot new books, and come up with projects that really appeal to Apple and to viewers. One thing that HBO was always very good at under Plepler, I think even better than companies like Netflix or Disney, was finding what was really going to tap into the zeitgeist. You take a show that maybe wasn't the most watched show in the world, and yet it would still seem like everybody was talking about it. If you think about a show like Succession or Girls or Westworld, these are shows that had relatively small audience bases but still had huge impact culturally and were shared constantly online.
Lucas, your great reporting was highlighting the ways in which all of these companies are trying to differentiate themselves to compete for viewers. You were noting earlier that Netflix may be trying to go the route of trying to win an Oscar for some of their movies to really stand out. Where do you think Apple continues to focus in 2020? Is it these shows? What do you think?
Yeah, I think it'll be shows and to a lesser extent movies with big name talent that helps them, they think, break through. It'll be something like The Morning Show, which has Reese Witherspoon, Jennifer Aniston, Steve Carell, Billy Crudup, and is up for 3 Golden Globes, I believe, this weekend. And that's in Apple's very first year making original productions. I think next year you're going to see them try more of that, try, like Netflix, to compete for awards. But whereas Netflix has taken a kind of a volume approach where they're making hundreds, and I think this year probably more than 1,000 pieces of product, Apple will make fewer, but every one that they make will try to be big.
Thank you to Bloomberg's Lucas Shaw, all things streaming wars. And still ahead, the biggest tech companies are heading to Las Vegas for that annual CES trade show with digital assistant technology set to take the spotlight. We'll discuss what else is in store. This is Bloomberg. The world's biggest tech companies are heading to Las Vegas for the annual CES trade show next week, with even Apple making a rare official appearance. Let's find out more with Bloomberg Technology's Mark Gurman, who joins us from LA. Mark, what are you going to be looking for?
Yeah, I mean, CES this year, to be totally honest with you, Taylor, I think is going to be, kind of boring. For lack of better term, I'm not expecting any bombshell or breakthrough new developments from any of these big companies, even the Apple you mentioned. I think there's just going to be a lot of talk about smart speakers. There's going to be a lot of talk about integration with cars. You're going to hear all the buzzwords. Last year I saw a shower that had Alexa integrated into it. So maybe this year it'll get Google Assistant or work with Apple HomeKit. So I think it's going to be a lot more of the same, and the tech companies are going to continue holding their fire until they're ready to make big splashes on their own timeline.
Mark, you were never allowed to say boring on live TV with me again. So talk to me about Apple, because they are making that rare official appearance. Why now?
Yeah, I mean, this is all about privacy, right? So Apple's not going to be making any hardware or software announcements or anything like that. They're going to have their senior director of privacy initiatives on stage on a roundtable with chief privacy officers from other companies, including U.S. government officials, as well as Facebook. And what Apple's going to be doing here is giving its stance on privacy. And of course, their stance is, when it comes to Las Vegas, where CES is what happens on your iPhone stays on your iPhone. Now, there's an argument to be made that that's not entirely true, but you see their perspective there. They're trying to hold themselves up as this privacy pioneer in the technology industry, and they're going to continue doing this with this speaking engagement. And of course, Apple makes many speaking engagements related to this topic as well, so this is not unique.
Well, Mark, you're spot on. I just spoke with Dan Ives over at Wedbush, who will be going to CES as well, and he said this is Apple's real way of differentiating themselves from the other big tech companies. You think like of Facebook, for example, given their stance on data privacy. You've been covering Apple. How is their stance on data privacy? Are people really buying the fact that it's safe and they're keeping our data private?
And I will see Dan there, so looking forward to that. But in terms of Apple's stance on privacy, I mean, People believe it. People understand that there is sort of a trade-off that's been made in terms of the functionality of some of Apple's AI initiatives with privacy, that they're not as good as perhaps Google or Amazon. Apple strongly pushes back on that, says it's not true. But a lot of people do think it's true. I myself think there is some truth to that as well. But I think Apple has the technology to sort of beat that out and make it true that Apple is able to have the best technology on AI, but also be the most private. People understand that there's lots of encryption and security that goes into effect with the iPhone, and what you really haven't seen is a major privacy breach or anything like that on Apple's part compared to what you may have seen from some of the other internet services giants. So, all in all, Apple is talking a lot about privacy, but it's also backing it up in practice too.
Mark, 20 seconds here. Should we continue to see further integration between all of these companies so that my experience as a consumer is seamless? I can have an iOS on an Amazon, Alexa, etc.
They say you will, but as we've discussed a few times before, I don't necessarily buy it. I think all of these companies are trying to beat out each other. So this is going to be a lot of talk, and I'll believe it when I see it. But I don't think it's going to be at 2020's CES.
Bloomberg's Mark Gurman, thanks for joining us. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.